So this property right here is one of the best kept secrets in Denver, and I'm not talking about this particular property, I'm just talking about this type of property, because the truth is that right now, for the first time in 4 years, housing affordability is actually coming back to its center, and we're actually in a very strong buyer's market. Sellers are waking up to the fact that houses are not affordable with interest rates where they are, and they've started to actually lower prices to where they should be in a more balanced market. And the property I'm referencing here, the reason it's such a good deal is because it's actually a multifamily property, and what most people don't realize is that properties like this, and this is not just true in the state of Colorado, but in other states as well, you can literally get into a property like this for as little as $1,000 down through some of the down payment assistance programs that are available for first-time home buyers. And so if you're one of the people that's been sitting on the sidelines, I don't blame you, because I bought my last property in 2021. I've been telling people it's a terrible time to buy. And as a realtor, you might think I'd be biased in wanting to always tell people that it's an excellent time to buy. But the truth is, the math just hasn't mathed for the last 4 years, because interest rates have been high and sellers have been unwilling to make concessions and lower their prices. And they've been aloof to the fact that the market has changed until recently, where they're finally starting to come back to reality and understand that they need to make concessions and make things more affordable. And the reason I love these multifamily properties that you can get into with such a low down payment, and there's no scam, there's no gimmick, there's no course I'm going to sell you on how to do this. This is literally a down payment assistance program through the state of Colorado. So it's a government program that helps people get into their first property. And the best part is that down payment is actually a second loan that goes on your property, and it's a 0% interest rate. So even if you have the down payment or you have the money, the reason you want to use these programs is because of the fact that you can get that 0% interest rate, and it literally makes your down payment free money, and you can save that cash for something else instead. And the reason I'd rather use that down payment assistance program, even if you have the money saved up, is because of the fact that it's a 0% interest rate, which means that you don't have to use your own money, and it's basically free money that you can borrow. There's no payments on it, so you don't have to pay it off until you actually refinance the property or you sell the property. It's just a nice freebie that the government will give you to help you get into a home, and then you pay it back with no interest whenever you sell or you refinance. And the real reason I love these properties is because when you look at some of the inventory that's on the market, especially in the single family space, because we had such a quick run up in prices in 2020 and 2021, where at least in this market that I'm talking about in Denver, we went up 50 to 70% in terms of where median list price went. And depending on what specific zip code you're looking at, I mean, it was a huge, obvious bubble, at least to me. And when I bought in 2020 and 2021, I knew that things had bubbled up, or they were high. And I was surprised to see them go even higher into 2022. But the reason I love these properties so much is that right now, they're some of the most affordable buys, especially for people that are looking to be an investor long term. So if you're a first time buyer and you've been trying to get into the market, but everything seems unaffordable, if you use one of these first time buyer down payment assistance programs, one of the biggest benefits when you're getting into something like a duplex, triplex, or fourplex, you can qualify for a lot more property because they know those other units are going to be rented out. And so as a result, what that means is you're going to be able to qualify for a bigger payment, but your actual payment that you're responsible for as one of the tenants in one of those units is actually going to be lower. And in order to explain this, the easiest way to do it is on the whiteboard. So I'm going to wait until we get back to the office to show you how these numbers actually pencil out. But they're absolutely some of the best deals that you can get right now when things are still elevated in price. I still think we have a little bit ways to go, although we're already down 30% in the Denver metro. And one thing I'll show you is that on the whiteboard, this makes a lot more sense, is that when you have a run up in prices of, let's say, 50 to 70%, you actually only need to come down about 30 to 40% to be back at your starting point. And so that's why it's so important to be non-emotional and look at this as a transaction and see where the numbers actually are. Because 2 years ago, if we were looking at properties like the one I just showed you, they absolutely did not pencil on paper. They might have been asking $800,000 or more for that property. At a 7% rate, your payment would be somewhere around $4,500 to $5,000 a month. Whereas now you can get into a property like that with a payment closer to $3,500. And so your net payment, because remember, you're going to have in a property like this is a triplex. It has 3 units. And so if you're living in one of the units, your net payment would be less than what you would be paying as a renter if you were just renting one of those units. And so the general way that the housing market works that a lot of people forget is that it's always an equation of renting versus buying. And right now, for the past 4 years, we've been in a solid renter's market in the sense that it's as expensive as rents have gotten, it has been cheaper to rent than it has been to buy. And so this is why a lot of people have been renting or opting to rent instead of buying. All right, so like I promised, I'm back in the office and I've actually got this particular deal drawn up on the whiteboard for you. I'm gonna go through all the numbers to show you how this deal is actually starting to pencil. Now, the big thing to consider when you're looking at these is this is a non-emotional decision. You're looking at the numbers and we're comparing two things. How does this unit compare as an investment, and also how does it compare from a rental versus buying perspective? Because most people, if you're watching this right now and you're trying to find a house, especially if you're considering a duplex or a fourplex or something like this, which is an excellent starter. I think it's the best starter home you can get because of the fact that you have built-in rentals with the property. The thing about these properties is they're normally not as desirable as a nice single family home, but it's also not as expensive because you have someone helping you out paying your mortgage. And in this case, because we have 3 units, we have 2 other people helping us pay the mortgage while you get to live in one of the units for free. So I'm going to go through the numbers on an individual basis and you can see how this pencils at today's rates, at future rates, which you can refinance in the future. But there's some caveats to that because the truth is you cannot refinance without certain requirements in place. Now, first off, let's look at this property. This property is currently listed at $625. Now, at this price, I think it's still a little bit on the high side. Once we go through the numbers, you'll see why. This is kind of the range I would be targeting, but we're going to price this out at $625 so you can see what the numbers actually look like. So at $625, your mortgage is going to be around $4634. This includes PMI, and this is critical because we're going to talk about this shortly. Now, this property, because it's 1 to 4 units, this particular property is 3 units, it qualifies for 3.25% down, which is about 20 grand. However, you can get this paid by a down payment assistance program for first-time buyers, which means your down payment is literally can be as little as $1,000. That's the minimum requirements. You can put down more than that, or you can take advantage of it and put down $1,000. And this down payment assistance that they give you is a loan that you have to pay back when you refinance. There's no payments on it, and it's at 0%. Literally no payments for up to 30 years. And when you pay off the first loan, you have to pay that off, or it gets paid off when you refinance. And chances are you're going to refinance in the next few years because interest rates keep coming down. So, and that's not a guarantee, but that's obviously what the market looks like. Now, PMI at 484, this is your mortgage insurance. This can go away usually after 2 years. It can be longer depending on what happens. So don't bank on this immediately disappearing. But what the requirements are 80% LTV, and I can tell you how you get there. Part of this is paying down the loan over the next few years. After 2 years, typically what causes it to go down or it causes the bank to reassess this is number one, they're going to look at the property going up in value just inherently. They're going to look at properties in the area. But more than that, you're also paying it down and you're showing 24 months of on-time payment history, and the bank takes that into account when getting rid of your PMI. And if you look up here, and anytime you refinance, when you refinance this original loan, that also gets rid of this mortgage insurance, which drops your payment. And I'm going to show you now that we have an idea of what the payment looks like, which I'm not going to lie, that's a little high to me still, which is why this deal isn't perfect. And it's not penciling at this number, but it might at a little bit lower number, which I'll show you shortly. But with these 3 units, I happen to know this area very well. So you've got 2 1-bedrooms, which is not a perfect rental mix, but it's not bad. These are, great for single people. These are $1,400 a month is what this is going to rent for in Golden. On the low end, if you wanted to rent a little bit below market just to avoid vacancy, that would be around $1,200. For the studio, same thing. It'd be around $1,200 or $1,100 on the low end. However, remember, because this is an FHA loan, you have to live in one of these units. That's one of the requirements. What my recommendation would be living in the studio. You could even build this studio out and make it bigger, make it into a 1-bedroom or a 2-bedroom or something bigger. And guys, remember, this isn't your dream house. This is just a starter investment property that you're getting into with literally $1,000 down. So beggars can't be choosers when you're starting off with $1,000 to buy a $600,000 property. So when we look at your rent roll, $1,400 would be your first rent for your first 1-bedroom, and your second 1-bedroom, you're living in the studio. That's my suggestion for this purpose, and that's what I would do if I was a single individual. That gives you $2,800 in rents that you're collecting against $4,634 is your payment. That means your net responsibility is $1,834. Now, compared to what a studio costs, this is not a good deal. This is more expensive than what that studio costs, and so the rent versus buy ratio right here, it doesn't pencil. Watch what happens when we lower interest rates and when we get rid of this PMI, because remember, this is your PMI insurance. When we get rid of this $484 PMI insurance, now you're only at $1,350 as your net rent payment, which means we're getting a lot closer to what this rent versus buy equation looks like, because you're comparing $1,350 up to $1,100, which is what market rents would be. Here's what happens when we go to different interest rates and when we look at different price points, because like I said, if I was representing you as an agent, I would not come in at this price point in today's market, and I'll tell you why. The bottom line is, if we look at this deal, it just doesn't pencil at these rates, and so, but it will pencil at this price a lot better and you'll see what happens. So at today's rates, at 625 grand, which is the first deal that we're looking at here, that's the asking price that they're asking for. At 4634, which is what your payment's going to be at today's rates, which is 6.25%, which is about 6.2%. Your payment would be at 4634, including PMI. But at 5%, you're going to be at 4204. At 4.5%, you're going to be at 4022. This is how much interest rates affect your payment. Now watch what happens to your net rent. When you go to a 5% rate and you still have PMI, your net rent now becomes $920. At 4.5%, this becomes your total payment, $4020, which means your net rent is $738. So this is getting a lot more attractive because if you look at the rent versus buy equation, right now, market rent would be $1,100 for the studio and it's only costing you $738 a month. Now watch this. When we go to a lower purchase price at 550 grand, because this would be the most I would want to offer on our first offer. It's not a competitive market right now. Watch what happens to your payment. At today's rates, you're at $4125. That means without PMI, you're going to be at about $3725. At 5%, you're at $3757. At 4.5%, you're at $3596. This is with PMI. That means without PMI, which is your insurance, you're at $3200. Watch what this does to your net rent. Net rent is now between $400 and $925 compared to what market should be for the studio you're living in out of this 3-unit property, meaning that the rent versus buy equation in this scenario for a multi-unit property makes sense because we got it at a lower price. Now, if we don't get it at that lower price, we don't buy it. And that's why you approach this from a non-emotional decision. And that's why I absolutely think now is an excellent time to buy when you look at two things. Number one, it is a solid buyer's market, which means we have a lot of inventory to choose from. And if this seller doesn't take your offer, we'll go look at another deal and we'll put in an offer until we find a deal that pencils for you and makes sense. And number two, even if the deal doesn't pencil at asking price, all we have to do is put in an offer below asking price. And the offer I suggested at 550 grand is not that far off from what a seller would probably take, which is about 10% below list price in today's market on a lot of properties. And the reason I like this particular property is this property happens to be in Golden, Colorado, which is a very desirable area, which gives you access to better renters because it's in a desirable neighborhood. Plus, for you, while you're living in one of the units, it's going to be a much more enjoyable property to live in because you're not living in a beat up apartment building in a rough neighborhood. Now, it's not in perfect condition. There's some Formica countertops that needs a little bit of work, but that's where the value add comes in because one of the best things you can do is when you first move in, you live in one of the units and then you renovate it and then you move out of that unit after you get it rented out and you live in one of the other units and you do the same thing there and you rinse and repeat until you have a fully renovated property. You can even add square footage. You could build out the studio ADU into a little bit bigger square footage. And the truth is I made another video that talks about renting versus buying in 2026 because right now for the first time in really about 5 years, the rent versus buy equation is starting to make more sense to buy versus rent on select properties, which is an indication that we're heading in the right direction for buyers and so that it's a more balanced market and you can actually get into a property now that you can afford and that actually makes sense financially. Because what happens is when interest rates go up so quickly is that sellers do not want to lower their price because they haven't realized that the market's changed and they haven't realized that just because their house might have been worth $800,000 1 year ago, and this was in, let's say, 2022, it's not worth that anymore because interest rates are now in the 4s and the 5s, and therefore their house is not as affordable at that higher interest rate and that higher price. And the way that you make a home affordable at a higher interest rate is by getting a lower price. And that comes simply by asking for a discount. And the reason the market's been so slow in 2022, 2023, 2024, and 2025, and that's what's caused downward price trajectory and home prices starting to fall, is the fact that elevated interest rates have forced sellers to readjust their expectations to what is actually out there in the market. Now, the truth is, this is just one example I picked out, but there's literally several other properties in the market right now that make for excellent rentals. There's this property I found in Arvada that is literally composed of only 3-2 units. Now, this property might seem expensive because it's over $1 million, but the truth is each of these 3-bedroom units will rent at over $2,000 a month. And that's at a very cheap price in Arvada, which means that if you were living in one of the units, you would have enough cash flow from the other units at $6,000 a month combined to cover your mortgage. And then in a few years, especially after you renovate or do anything to improve the property, or if you move out of that unit, you would be able to cash flow that property. And now you're having some passive income, which there's no such thing as passive income, but you can hand this off to a property manager. So they manage it for you. They're going to take a small fee. It's usually 10% of the rent rolls, and you could have $1,200 to $1,500 to $2,000 or more per month in passive income from this unit. And there's another property for sale in Arvada right now that's composed of 2-bed and 1-bath units, and this is a 4-plex, which means there's 4 units, and it's listed for $850. Again, you could probably come in a little below that, but even at that price point, that unit pencils, because those units would easily rent out for about $1,400 a month. And that's how you start to get a good deal on a property, is right now, because no one is paying attention, because everyone's been tuned out for the past 4 years because everything seems expensive. And I promise you, when I bought my first property, my commercial building in 2018, it seemed expensive at the time, and it was $325,000. And today I have it listed for $625,000, and we're not the most expensive property on the market. We're priced right in the middle, similar industrial condos, and that building is considered extremely affordable for that niche and that owner user that's going to use that. And my first rental property that I bought, when I bought it at $515 in the city of Golden, because again, Golden was an area that I lived in for several years. It's one of my favorite areas, and it's also a very desirable area to live. When I first bought that property, I thought I was overpaying at $515, but if I was to list it this spring, I would easily be able to list it for somewhere around $699 and be able to sell it very quickly at that price, meaning that I have $200,000 in equity, and that would be considered a little bit under market on a price per square foot basis by comparison with surrounding properties. So my point in telling you these stories is this: anytime you're buying a property, your first property, it always is emotionally charged and it feels very expensive because it's a nerve-wracking decision. But the truth is that over a 5-year period or a 10-year period, you're going to be money's up. That's just a fact. And the only thing that changes that is if we have some sort of black swan event, if we go to civil war, which, hey, 2026 is not looking like a bad year for a civil war, I'm not going to lie. But over the years, everyone that's bet against the American economy and the American industry up until now has been wrong. It doesn't look like a good time to start betting against it on paper, because I know things are not perfect in society, but for the most part, we're pretty civil, pretty just society. 99% of us get along when we meet each other every day. It's only when you go on the internet that you think we're all assholes that are shooting each other in the face, which is just really not the case. And like I mentioned earlier, I made a video specifically about renting versus buying in 2026, and I used several properties that are single family residents as well as these duplexes and 4plexes as examples. And right now that video is popping up on the screen, so make sure you check that out if you haven't already, and I'll catch you on the next episode. Peace.